Hello, everyone. Welcome back to Accounting with Oscar. Welcome back to my little YouTube community here. It's great to see you all. We are back for another May-June 2025 Paper 2 discussion. And today we'll be looking at question 3 of this paper. Now, question 3 here deals with a number of year-end adjustments. So specifically, we are looking at depreciation, we are looking at doubtful debts, as well as certain accruals and prepayments adjustment. So it's going to be a straightforward question, straightforward answers here, with a little bit of an extract of the financial position, as well as some knowledge on these year-end adjustments. So without further ado, let's get started. Jasmine owns a consulting business. At 1st of April 2024, Jasmine's ledger accounts included the following balances. So these are your opening, right? They are your opening balances, your balances brought down. So we have motor vehicles of 16,000. There's a provision for depreciation of motor vehicles at 7,000. Trade receivables total 12,220, with the provision for doubtful debts standing at 366. Now, besides that, we also have prepaid rent of 900, as well as some unpaid or accrued rates of 270. During the year ended 31st March 2025, Jasmine's bank payments included the following amounts. So this was what you paid for during the year. We paid for motor vehicles, 18,000. Now, what does that mean, right? What does it signify? It tells us there is an addition of motor vehicles, right? Probably Jasmine bought extra vehicles for 18,000. And she also paid rent and rates for a total of 14,960. Right, so fairly straightforward information. Let's move on to the notes or additional information here. Depreciation is to be provided at 25% per annum using the reducing balance method. A full year's depreciation is to be charged on vehicles purchased during the year. So 25% reducing balance with a full year's charge. Nothing too complicated there. Number 2. Trade receivables at 31st March 25 were $11,800. An amount of 300 is still to be written off as irrecoverable. So this 11,800, you have to write off a $300, which is irrecoverable, right? Still to be written off. Means it has not been done yet. So the receivables after writing off the bad debts would be 11,500. Now note 3. The provision for doubtful debts is to be maintained at 3% of the net receivables. 3% of the net receivables, so 11,500 by 3%. How much are you getting there? 345, right? Should be getting 345. At 31st March 2025, prepaid rent was 925 and unpaid rates were at 185. So I believe the notes or the additional information given here is very straightforward. There's nothing really complicated. So we're going to start by preparing the ledger accounts, right? Start making the adjustments for each item. So part A, prepare the provision for depreciation of motor vehicles account for the year ended 31st March 25, balance the account and bring down the balance at 1st April. So to start us off, I believe we're gonna park in the opening balances. So motor vehicles, they are our non-current assets, right? We use them over the long term. A provision is a reduction in the value of asset. So assets will be on the debit side. Any reduction to the value of asset will appear on the credit. Hence, my opening will be on the credit side. On 2024, the 1st of April, April Fools, balance brought down. $7,000. So opening on the credit side. Now what I need to do here is to work out the depreciation for the year ended 31st March 25. So we're going to calculate a 25% reducing balance. 16,000 minus 7,000, that's 9,000. So 25% of that would be 2,250, right? That's our depreciation for the year on the existing asset. Do not forget, we have addition, right? New motor vehicles purchase. Now, these are charged at 25% on a full year's basis. So we're not going to do any prorata, right? We're going to take 18,000 multiplied by 25. Which leaves you with $4,500 of depreciation. Now add them up together, both of them, 4,500 as well as your 2,250. You should be getting a depreciation charge at the end of the year of, how much is that? 6,750. Right, 6,750. These two figures added up. So with that, let's close the accounts, work out our closing balances, and bring our balance forward. So you're gonna get a closing balance of 13,750, and on April 1st, you're gonna bring it down 13,750. Easily, you should have gotten 4 marks here. Really straightforward. There's nothing complicated at all. So that's the provision for depreciation account done. Now, moving on to part B of the question, they want you to prepare the provision for doubtful debts account For the year ended 31st March, so balance the account and bring down the balance at 1st April 2025. So similar to the provision for depreciation account, we're going to start with the balance brought down. So once again, receivables are an asset. They appear on the debit side. Your provision for doubtful debts will reduce the amount of receivables. So any reduction to asset will be on the credit side. So 2024, 1st of March, let's park the opening balance. $366. Now, you have to understand how doubtful debts work in order to get the ledger out. So, doubtful debts, they are a continuous balance. We bring it down year to year. So, every year end, what we're going to do is we are going to compare the balance on the doubtful debts account at the end of the year versus the balance at the start of the year. So our opening balance was 366, and by the end of 2025, our doubtful debts had fallen to $345. So from 366, we reduce it to 345. That is your balance carried down, right? $345 is your balance carried down for doubtful debts. So let's try to park that in first. 2025, 31st of March, we're gonna have a balance carried down of 345, and you can see why I left a space up there, because there will be a balancing figure that we're gonna calculate, and that is the change in doubtful debts. So 366 has reduced by $21 to 345. Doubtful debts have reduced. By $21. Now, if you work it out correctly, the ledger should balance up. And now, we're going to bring in the balance brought down, right? 2025, April 1st. So, balance carried down will be brought down to the credit side, $345. That is your doubtful debts. So again, you should be easily scoring 4 marks here, solid. There's no complications at all. Now let's move on to part C. They want us to prepare the rent and rates account for the year ended 31st March 2025, balance the account and bring down the balances at 1st April 2025. So again, we're going to do the same thing as we've done above for depreciation and doubtful debts. We're going to bring down the opening balances. Now, there will be 2 opening balances here. One for the prepayment of rent and one for the unpayment, if there's such a word, or the accruals of rates. So prepayment, you pay in advance. It's an asset. It appears on the debit side. And anything unpaid, anything accrued, is a liability that we have to pay. It will appear on the credit side. So debit 900, credit 270. That's our opening balance. Debit 900, credit 270. And there you have it. Okay, that's the opening balance. Now, the information that we can park in will be the bank payments, right? 14,960. We paid for rent and rates. Now, where are you going to park it? On the debit or the credit? So, if you're not sure, work out the double entry. Debit, rent, and rates, right? Because these are your expenses. Debit, rent, and rates. Credit, bank, because money goes out. Reduce asset. So you're going to debit, rent, and rates. 14,960. Let's do that. 14,960. Yeah, probably I should shift it down because I have to write the year. This is 2025, March 31st. Bank. We paid 14,960. Right, after we've done that, I believe we can work out the closing balances, right? That's something we can do. So prepaid rent was 925, unpaid rates 185. Okay, so prepaid rent, prepayment is an asset, so your carried down is on the credit. Prepaid rents of 925 and accrued rates of 185. Alright, so all our information packed in. Let's try to work out the charge. Right, calculate the rent and rates for the year. So that will be here, right? Our income statement figure. What is the total charged for rent and rates during the year? So obviously the debit side's gonna be larger, 1645. Let's bring that over. So minus 270 minus 925. The total charge to the income statement should be 14,850. Don't forget to bring your balances brought down, very important. You don't want to lose 1 mark from there. Alright, so with that, we've covered the rent and rates account. That's part C of the question done. So once again, it should come to you very easily. You should be scoring 6 marks here. You should, right? Or at least a solid 5 marks. Okay, so with that done, let's move on to part D of the question. At 31st March 2025, Jasmine had a bank overdraft of 2,620. Alright, so prepare the current assets section of Jasmine's statement of financial position at 31st March 2025. So prepare the current assets section. Okay, let's try to get this done. So we have current assets. So what's the first item you're gonna park in? Do you put in the motor vehicles? No. Okay, motor vehicles are non-current assets. They don't belong under current assets. Now, how about trade receivables? Yes, okay, we're gonna park in the trade receivables, but be careful, don't use the opening balance. You have to use the closing balances, right? You have to use the closing balance. So trade receivables will be 11,500 after deducting the irrecoverable debts. So 11,500, and you have to do a separate line presentation for the provision for doubtful debts. It's always a separate line item because it's doubtful. It's an estimate, right? You don't set it off against the receivables, right? Don't do that. Don't minus the provision from the receivables straight away. You present it as a separate line item. So our provision is 345. So we're going to park that in. Separate line item 345. And you should get 11,115. So what else do we have here? How about the prepaid rent? Do you park it in at the end of the year? Prepaid rent? Yes, alright. Prepaid rent is a current asset, 925. How about the unpaid rates? Do you bring that in? Unpaid rates. No, these are liabilities, right? They are accrued payments. We owe them. So you don't park in the unpaid rates. Alright, anything else to deal with here? I believe no. Right, so how about the bank overdraft? Yeah, how about Jasmine's bank overdraft? Do we put it in? Are we supposed to put in the bank overdraft? Nope, right? Overdraft is a liability. It's a current liability. You'll park it in the liability section. So don't go and minus a 2620. Don't do this. You do this, you're gonna be wrong, right? We don't park the overdraft. You don't contra it with your current assets. So our final answer, $12,080. That is the current asset. Don't park in the overdraft. Do not park in the bank overdraft. I repeat, right? It's not an asset. It's a liability. You should not contra the overdraft with the assets. Alright, now let's look at the last part, part E of the question. Some small little theories here, all 1 markers. State how the principle of consistency is applied when charging depreciation. Now, a bit of accounting principle knowledge here. How do you apply consistency as you are charging depreciation? So your answer should be somewhat similar to mine, at least the contents should be the same. So we're going to tell the marker that depreciation is charged using the same method each year, right? You charge depreciation using the same method every year. So if you use straight line method, follow on with the straight line method. Do not change to reducing balance out of no particular reason. If you're using reducing balance, stick to reducing balance. Don't change it to the straight line method for, again, no apparent reason, right? That is consistency. So if you have somewhat a similar keyword using the same method or the same policy each year, then you should be getting your mark. Right, state one way Jasmine may reduce the possibility of irrecoverable debts. How can you reduce irrecoverable debts? There are lots of answers to this. Burning down your customer's shop is not one of it. Okay? Don't ever write that down. Some of my students, they have done it before. Don't do it. I've marked ridiculous answers. Don't say burn down their shop. Don't say throw some snakes into their shop. Don't do that, okay? You have to be ethical. So what can we do, right? We can offer cash discounts, get the customers to pay earlier, right? You can do prompt invoicing, right? Invoice on time so that customers will pay you on time as well. We can send reminders to the customers to let them know they still owe us money. You can even engage, let's say, a debt collection agency, right? Or if you want to state factoring, debt factoring, selling the debts to someone else, that's also possible. Or even refusing further sale, right? Don't sell to the customer. Refusing further sale until account is paid, right? So I've given you, I think, more than enough answers there. Apply a bit of logic, apply a bit of common sense, and everything will come to you. Now, the last question. State which accounting principle Jasmine is applying by making an adjustment for rent prepaid. Right? When you make an adjustment for your prepayment, what accounting principle are you complying? Are you applying? Your answer should be the matching principle, right? Applying the matching principle. So you match your expenses to the year income is generated, right? Match the expenses to the year they are incurred. That's recording accruals and prepayments. So with that, we've covered the third question of the May-June 2025 paper 2. That was relatively easy, should be getting 17 or 18 out of 20 here. So if you have any questions, leave a comment down below and I'll see you for video number 4, where we're going to take on the next question on correction of errors. So if you like this video, make sure to like, share, and subscribe. Share this with a friend, help them out, and I'll see you for the next question of this May-June 25 paper 2.